Hello to you all, Mindsetters. This is your chance on Learn Extra Live to learn more with us and learn extra on accounting. My name is Abraham, by the way, and I'm joined by Mr. Ashraf. How are you?
Fine, thanks.
The accounting buffin himself.
Thank you very much, man.
Are you well?
I'm well, and how are you today?
I'm doing well. I last saw you in 6 months.
Yes,
in 4 months. I last did a show with you.
Where were you hiding?
I wasn't hiding. I was doing some business because you need business for you to apply accounting.
Were you actually putting the accounting into practice?
Yes, that's what I was doing.
Spot on, my man.
Thank you, and I hope to learn more also today.
Definitely.
What are we going over?
We're going over a section which matriculants, when they hear the name, guys, Mindsetters, accounting boffins out there, we're going to look at asset disposal today. Okay, and generally, when they just hear asset disposal, maybe they just go weak in their knees and they say not asset disposal. But we're going to make sure that after today, they're going to say yay
Yes.
for asset disposal.
Yeah. Well, I'm hoping for such response also. But Mindsetters, for you to learn more and learn extra with us, you need to join us on Facebook, like our page, join the 52,000 likes that we have. There are other Mindsetters that are there on Learn Extra. It's just facebook.com/Learn Extra. Secondly, you can follow us on Twitter at Learn Extra. Lastly, download your notes all for free on learnextra.co.za/live because we are live. The first link, notes, will be available also on our Facebook page. So for now, let's go ahead.
Thank you very much. Okay, guys, when it comes to asset disposal, what is it that you have to remember? Let's start off by looking at the following. We're going to revise asset disposal, and we're going to show you certain shortcuts, certain techniques, certain methods that you need to apply when you are answering a question on this section. Now, what are the key concepts? Let us start off with depreciation. Firstly, depreciation, and I'm sure you know this, is what we call an imputed expense. What does an imputed expense mean? Now, very simple. If I say that this smartboard pen was worth 1,000 Rand at the beginning of the financial year, by the end of the year, if it's only valued at 900 Rand, obviously it has decreased in value. The decreased value for this year is what we refer to as the imputed expense. In other words, it's an expense whereby no cash is leaving the business. Now that is very important. Now once again, notice in accounting you do not learn in boxes. You don't learn in compartments. Watch. The same thing you will link to your cash flow statement. What do we mean by this? By this we mean, remember in your cash flow statement, one of the components that we add back is depreciation. And why do we add back depreciation? Because it is a non-cash item. It's an item that does not affect the flow of funds. So, depreciation as part of the cash flow statement, very important. Secondly, we also deal with depreciation when dealing with cash budgets. Remember, if you are preparing a cash budget, one of the items that will not, I repeat, will not appear on my cash budget is depreciation. Why? It does not involve cash. However, if you are preparing the projected income statement, then definitely you would show your depreciation. I hope that is crystal clear. Okay, so now let us start off with a very basic and simple calculation. If you are told that you are writing off depreciation using the cost price method, another name for it is the fixed installment method, and a third name for it is the straight line method. Now once again, AB, we can in fact tell our viewers this year
Yes.
that you don't have to be in grade 12 to be listening to us. Even your grade 10 and 11 accounting students, we welcome them on board, because definitely this is work that they've covered in grade 10 and 11 as well. So it will benefit them as well, guys. So come on. If you know the grade 10s and 11s and you know that they would benefit from this, make them aware. Guys, this is the place to be, because definitely you're going to learn from this as well.
It's all about sharing the knowledge also and preparing them.
Absolutely.
Yes.
And the grade 10s and 11s will be writing maybe their assessments soon, and very soon they'll be writing their final exams as well. So I'm sure they will also benefit tremendously from all our mindset lessons.
So true.
Okay.
And one thing that I found when it comes to accounting also, study groups, they help a lot when it comes to
Brilliant.
accounting.
As long as they get there and they work and they don't discuss everything else but the accounting. Okay.
Yes.
Coming back to the cost price method, guys, watch. My cost is 100,000. And whenever I am doing a calculation on depreciation, I always use art. Now, does this mean that you're going to draw a picture of your accounting teacher? Certainly not, guys. Art means, watch, the amount, the rate, and the time. So in other words, take the amount, the capital sum on which we're working out our depreciation, which is 100,000. Remember, this is the cost price method. So 100,000, firstly, there's my cost. Multiply it by the rate. That means the rate of depreciation, 10%, 20%, 30%, depending, right? And then multiply it by the time component. Therefore, you can see amount, A, R, T. There's your art. So whenever you're doing a calculation which involves depreciation, guys, always use art. Okay, so in this calculation here, what have we found? We have found that if you do this calculation, your answer for your depreciation is 10,000 Rand. And you are well aware of the fact that the double entry for depreciation is what? Come on, you should be shouting out the answers wherever you are. A debit to depreciation. Why? It's an imputed expense, therefore debited, and you would then credit the negative asset. Which one? Accumulated depreciation on equipment or vehicles, whatever the asset is that you are dealing with. Okay, now that's the one method. Remember we said cost price, and another name for it, a quick recap, is the straight line method and the fixed installment method. Okay, we now come to another method, and this one here says calculate depreciation on the diminishing balance method or on the reducing balance method, another name for it. But very important, in this one here, you find that you have to work with the carrying value. Notice a complete change from the other method. The other method was the cost price, and in this one here, it's the carrying value that we are working with. Okay, now let's take an example. The cost price is 100,000. The cost of my asset is 100,000. Why do I leave it at 100,000? Which accounting concept am I applying here? Grade 12s, your GAAP concepts are important. In this case here, the historical cost concept. And what do we mean by that? By that we mean that an asset is recorded at its original cost price. There's it. Cost price does not change. Okay, accumulated depreciation on this asset is 10,000 Rand. In other words, the negative asset is 10,000 Rand. In other words, the original cost is 100,000. The negative component. Now, allow me to explain to you. when we say negative asset, what do we really mean? By this here we mean that component or that part of the asset that has been utilized. So if this was an asset worth 100,000 and you had to break it up into parts, you would say 10,000 Rand has been utilized already. Therefore the term negative asset. Okay. And I now say 100,000 minus the 10,000 is my 90,000. What is my 90,000? Accounting maestros out there. The 90,000 is what we call our carrying value. Therefore, notice when you are using the reducing balance method or the diminishing balance method, you have to work with the carrying value. And that's the secret. Okay, so now, there goes, again, amount, rate, and time. Art. And we find that my depreciation amounts to 9,000 Rand. Using which method? The reducing balance method or the diminishing balance method. Right. And the secret, guys, we said, work with the carrying value. Okie dokie. Done with that? Now, watch this one here very closely. Watch this one here very closely. We have an asset with a cost price of 200,000. The accumulated depreciation on this asset is 190,000. What are we told? We are told that we must depreciate this asset by 10% on the cost, right? So, if I'm going to depreciate this asset at 10% per annum on cost, watch this closely. 200,000 times my 10%, which is my R, and my T was used for the entire year, it would give me a value of 20,000 Rand for my current year's depreciation. Now, if I apply my rule and if I do the double entry, watch what's going to happen here. Accumulated depreciation, I know, had a balance of 190,000. Okay, so now I add the 20,000 for the current year, and that gives me a total of 210,000. What's my basic rule? My basic rule is cost price minus my accumulated depreciation is equal to my carrying value. Got it? Okay, so now this means that the carrying value of my asset is a negative 10,000 Rand. I'm sure you can see the amazement on my face as well. Abraham?
I can tell.
Can I say that this asset is worth minus 5 Rand? Can I do that?
Yes, you can.
Okay, let's go back, Abraham. Let's go back. We said that an asset, by definition, is something that has value. Got it?
Yes.
Can I say this thing is worth minus 5 Rand?
No, no.
Got
no,
it?
No.
Spot on, my man. That's it, grade 12s. What we are saying is that at no stage can you ever say that an asset has a negative value. Then by definition, it is not an asset any longer. So now, what does it mean? What does this mean for us as accounting students? We know, what have we said? An asset cannot have a negative value. There is no way you can say that this asset is worth minus 2,000 Rand. This means, therefore, that now we have to resort to another strategy. And what is this strategy? I'm sure you want to find out. So, to keep you with us, we're going to say, Abraham, back to you. So I'm sure you want to find out what are we going to do. So in order to do that, don't you stray or go away. Go for a quick break, Abraham, and then they'll be back with us. And then we'll lead them on to what we're going to do.
You've said it. If you haven't joined us on Facebook, join us and make sure that we help you. And you also help other mindsetters. Facebook.com/LearnExtra. We'll see you after this. Welcome back, Mindsetters. Now, good news, I'm asking for a day to all of you grade 12s. If you're available, I know you are available. Join me on the 23rd to the 27th of September, right here on Learn Extra, where we're going over spring school just for you. We just want to give you more information, learning more on the exam papers, because we have experts that are there to help you. Ashraf is going to be there also.
Yes, for sure.
So when Ashraf is around, you don't need to
fear.
You don't need to fear. Otherwise, taking about the date also, we'll be giving you some exam tips that you need to apply. We'll try and help you with those. Here's one that I just have to share right now. Sure. It says, before you start, read the instructions very carefully, then scan the whole exam paper. Can you take us through, Ashraf, in terms of scanning the question paper? Because other mindsets, when it comes to scanning, they think, okay, I see the question paper, I see the answer, and then immediately I just write.
No, I think what's very important, Abraham, from an accounting perspective.
Yes.
My advice to accounting learners out there, number one, we always give them reading time before the paper starts, before the actual writing time. And accounting learners, this is critical, guys, so make a mental note of it. When you receive your question paper, in accounting, we also give you an answer book. And therefore, what's important for you is to look at your answer book during the reading time. Why, Abraham? Because it gives you a clear indication of what is expected for you to answer in the exams. So, you notice that I always say this here, don't I? RTFQ. What does it mean? Read the full question. Don't just make an assumption. Read the question, make sure you understand. And by looking at your answer book, it will give you a clear indication of what you need to do.
I think also what normally works well, what works for me in accounting is starting with the sections that I think I'm best good at. If assets disposal is not good for me, I'll go to my balance sheet or something.
You are spot on, son. Definitely. Why? I told you this, I alluded to this in the other shows as well. And what did I tell you? I said in accounting, you are given an answer book. You don't have to answer question 1 first.
Yes.
You go to the section that you like best, answer that question, and what that does for you, it builds your confidence. So you are confident when it comes to other questions, and that's very, very important.
Well said.
Thanks for that.
Let's take some questions now.
Okay.
Are you ready for them? From the mindsetters?
Yes, let's
the
go.
first one is from Gobo. Gobo says, I'm an accounting student. I just want to know, as 12 over 12 means full year?
Absolutely. The 12 over 12 is the number of time in a year. So obviously, when it's 12 over 12, that would be the number of months, okay? And I know some people leave it out because 12 over 12 is equal to 1. But my advice to you is always use the time component, because you never know when the examiner is going to change it to 6 over 12. And if you are in the habit of using the time component, definitely you would benefit from that.
All right, another one from Karabo Mokele. Why can't an asset be valued 0?
Again, by definition, an asset is something that has value. Can I say this thing is worth nothing? Can't. You can't do that. That's why we are saying, by definition, if you look at the definition of an asset, it says something that has value, a possession that has value. And as a result of that, we cannot have it as valued as 0 or as a negative.
Well said.
Okay,
right.
Thank you. Can we move on?
Yes, please.
Right, guys, coming back to our 1 Rand story. So in other words, if you looked at the previous information, you saw that we can see here. Here goes. Right. What was it? We had an accumulated depreciation of 190,000, okay? So we now discard the 20,000. You can't use it any longer. Discard it. Forget about it. It's non-existent. You can't use it. Now what do we do? So we take this here and we say, fine. The maximum depreciation that we can write off on this asset, obviously, something else comes to mind now. This asset is probably an old asset. In other words, it's almost reached the end of its useful life. And when that happens, it means that the maximum depreciation that we can write off is 9,999 Rand. In other words, my double entry would be as follows. Watch here. A debit to depreciation, we all know why. It's an expense debited. And a credit to my accumulated depreciation. Reason, I'm crediting my negative asset to increase the negative asset. But the amount is the critical part. The entry will always stay the same, whether you're in grade 10, 11, or 12, or a university student. The entry for depreciation, a debit to depreciation and a credit to accumulated depreciation. Now, watch this here. If I now add my accumulated depreciation, and I add the 190,000 plus the 9,999 Rand, this gives me now an accumulated depreciation of 199,999 Rand. Meaning what? Grade 12s or accounting students, should I rather say, because I'm sure we have some grade 10s and 11s watching us. Okay, so therefore, watch this here. My cost price is 200,000 minus my accumulated of 199,999 to give me a carrying value of 1 Rand. What am I saying? I'm saying that this asset is now valued at 1 Rand. Obviously, it's an old asset and has reached the end of its useful life. Got that? Brilliant. Let's move on. Okay, now, when it comes to asset disposal basically means that we are disposing of an asset. Abraham, we are selling an asset. We are, now obviously, and I think this is important, when we purchase an asset, it's not purchased with the idea of reselling it. It's purchased with the idea that we're going to use that asset in our business. However, due to the asset becoming old, or we've outgrown that particular asset in terms of production, we need to sell it and buy something bigger. So understand that an asset disposal takes place as a result of an occurrence, or we need to upgrade our assets, or whatever the reason may be. It may be damaged, it may be stolen, there may be various reasons why we need to upgrade our assets. Okay, so now, this table here that you see in front of you is critical. Whenever you are doing a question on asset disposal, I implore you, I beg you, ek smeer julle in Afrikaans, if I have to say it. Okay? Can I say it in another language, Abraham? Or can we say it in Zulu or something like that if we're begging somebody?
Ngiyanicela.
That's the one.
Ngiyancenga.
I'm telling you.
Ngiyakupela.
Exactly. Whenever you are doing a question on asset disposal, please draw up this table here. What is this table all about? Number one, your depreciation of what? For the current year. And remember, when you are doing this calculation for the current year, you're going to say times X over 12, indicating the current months that you are working out your depreciation for. Step number one. Number two, identify your cost price. What was the original cost price of the vehicle or the asset that you are disposing of? What was its original cost price? When? At the time, remember we said the cost price will not change. Again, accounting concept. Which accounting concept? The historical cost concept. What does that concept say to us? An asset is recorded at its original cost price. Okie dokie, we've got that. Now, accumulated depreciation. Determine the balance when at the beginning of the year. Determine the balance at the beginning of my financial year. Remember, you're working within a financial year. So important, determine that opening balance. Now, this depreciation that you have calculated here is then slotted in to my, because my accumulated depreciation at the beginning of the year plus the current year's depreciation must be added together. So you can see that this comes directly from the depreciation that you have calculated. Add the two together and this will give you the total now of your accumulated depreciation. So, beginning of the year plus the current year's depreciation, add the two together, this now gives you your accumulated depreciation for the year, the total, on the vehicle that you are disposing. Right, now we come to carrying value. We all know that cost price minus the accumulated depreciation is equal to my carrying value. And alongside carrying value, put a big 3 there. Put a big 3 there. Why? Why do we put a 3 there? Because of the following reason. Remember, in my note 3, which is tangible assets, one of the components in that note, guys, is disposals at carrying value. Disposals at carrying value. So, take that amount and use it when you are completing note number 3 if it is a required. Right, selling price, obviously the price at which we are selling the asset, that's the disposal price, and we will discuss all the various ways in which we can dispose of the asset. Finally, what do we learn from this here? If my selling price is greater than my carrying value, if my selling price is greater than my carrying value, you will notice that I am making a profit on sale of asset. If my selling price is less than my carrying value, that means I sold it for less than the carrying value, then definitely I am making a loss. And grade 12s, specifically I'm addressing you now. If my selling price is equal to my carrying value, then I have neither made a profit or a loss. It's equal to 0. There's no profit on sale of asset, neither is there a loss on sale of asset. Remember, grade 12s, this scenario here applies only to the cash flow statement. Nowhere else in the curriculum, or let me rather rephrase that, everywhere else in the curriculum, you're either going to sell at a profit on sale of asset or a loss on sale of asset. But in the cash flow question, the disposal will be at carrying value. So no profit or loss on sale of asset. Okay, now let's move on to the double entries. So doing this here, the table, which we begged you to do, having done that, you will notice that we did not put through a single accounting entry, but we have determined whether we had made a profit or a loss on sale of my asset. Let's look at the double entries now. Debit depreciation, we are familiar with this one. We know this one. Debit depreciation, credit accumulated depreciation. That was the first component, namely the depreciation part of my table. Secondly, debit asset disposal, credit the asset account. What are we doing? We are transferring the asset account out of my asset disposal into where? Into my asset disposal account. Okay? So This here deals with the cost price. What have you done? You've transferred the cost price out of the asset account and done what with it? Transferred it into my asset disposal account. Okay, next one. Debit the accumulated depreciation and credit the asset disposal. Remember the asset disposal component. What's very important is that when you are transferring the cost of the asset, you've got to also transfer its accumulated depreciation. They have to go together. Therefore, this entry records the transfer of the asset, the accumulated depreciation into my asset disposal account. Okay, now we come to the carrying value. Remember we said there's no entry for it, there's no accounting entry for it. However, very important, note number 3 in my financial statements. In other words, what are we saying? That you're going to use that figure, the disposal of at carrying value, in note number 3 of your financial statements. Well, guys, I think we're almost
Before
done.
we take that break, Tawang says quickly, what must I do if I'm not being given the cost price?
Tabang, I will answer your question as soon as we get back, because it's going to take a bit of time for me to explain that. But don't you go far away from us. Have a quick break, refresh. We want your mind, body and soul with us just now.
Without any rest of time, we'll see you after the break. Welcome back to you all accounting buffins. I hope you're still learning more with us, and bring those questions. If you're struggling or seeing some flames, we're here to help you and make sure that we bring some fire extinguisher.
Yep, to douse the flame.
Yes. Here are some of the questions.
Yes.
Before the break, we had a question from Tabang,
Yes, very good question.
which says,
Tabang
what must I...
said,
Yes.
What was how would you calculate?
No, Tabang said, what must I do if I'm not given the cost price?
Okay, Tabang, if you're not given the cost price, then surely, let's look at this once again, just to clarify matters for you. So, they may give you other components of this table, Tabang. In a sense, if they give you the accumulated plus the cost price, you know what we did? Remember here, we said cost price minus accumulated gave me carrying value, correct? But if they don't give me the cost price, maybe I would add those two to get back to the cost price. So depending entirely on how the question is phrased, that's how you will go about answering the question.
All right.
Right, there was another one.
Here's another one from Puleng Pako. I think Puleng is trying to make a post-mortem because
Okay.
she was writing today. Well, she says, I was writing accounting today and I came across a question where a vehicle original cost was 30,000, but it was sold a year later for 24,000 Rand.
Right.
And we asked to calculate the depreciation. Do you calculate the depreciation for both costs or just the cost it was sold for?
Okay, I think I understand her question, and it's a very good question. I'll tell you why. It's Puleng, eh?
Yes.
Puleng, remember this here. Whenever you are calculating depreciation, you will always calculate depreciation on 3 components. What are those 3 components? Let me get some space here where I can show you what am I referring to. We'll come back to that one there. Whenever you're calculating depreciation, Puleng, you will calculate depreciation on 1, sold. Number 2, old, unsold. And number 3, new. What are we referring to here? We are referring to the following. 1, the sold equipment. That means the equipment that you disposed of, or the asset that you disposed of. That's the depreciation we regard as, or we refer to as the sold asset. Then you had old equipment which you did not sell. That's your old unsold, second component of depreciation. And number 3, did you purchase any new asset in the interim? That asset its depreciation would be added together, and what would you now have? You would now have the three components added together to give you your total depreciation. Got that? So remember, guys, and this is important, and I actually want to thank Puleng for that question, because very often in a question, in the exams, you are expected to look and calculate depreciation on what? On sold, old, unsold, and new. Okay, coming back to our asset disposal. We said that when we are selling the asset, watch, I'm going to show you different ways in which we're going to sell the asset. Number one, the selling price, if it was sold for cash, right? What's my double entry? A debit to bank and a credit to asset disposal. The selling price. A debit to bank, why? Asset increasing in value, if bank is favorable, debited. A credit to my asset disposal account. At this time here, guys, allow me to ask a question. What type of an account is asset disposal? Asset disposal is what we refer to as an interim nominal account. What does it mean? It means that it's an account that's opened up for a particular purpose and objective. And once you achieve that objective, you find that the asset disposal account self-destructs. What do we mean by that? It actually closes off. You'll see that just now. Okay, so if we sell the asset on credit, the first one was cash, which we dealt with. If we sell the asset on credit, what's my double entry? A debit to debtors control and a credit to asset disposal. Okay? What about a trade-in? What do we mean by a trade-in? I'm sure you understand the concept of a trade-in. A trade-in means we're buying a new vehicle from the garage, and the old vehicle is traded in on the new vehicle or new equipment. So a trade-in basically means that we are selling the old asset to the dealer where we are buying the new asset from. Therefore, what's my double entry? A debit to creditors control. Why is that? To reduce the liability, to reduce the amount that I am owing that creditor. I will debit the creditors control to reduce the liability, and I will credit my asset disposal. What common feature have you seen in all these methods that we've discussed so far? There's a common element. There's a common denominator, like we normally apply to it in mathematics. There's something common. Watch. Credit asset disposal. Credit asset disposal. Credit asset disposal. Surely you can see that no matter how you dispose of an asset, the selling price will always go to the credit side of your asset disposal account. Don't let it off, understand it. Okay, next one. The owner took the vehicle for personal use. Now, I always say, whenever you come across the word POP, Abraham, POP, and, you know, I like my funny acronyms. When you see POP, what does it refer to? Personal, owner, or private? Immediately it rings a bell. That's to do with the owner. And anything to do that deals with the owner is related to drawings. You're right. Spot on.
You don't know what James thought. He thought popcorns.
Is it? Okay, never mind, James. Now you know, if you see pop in an accounting paper, it means we are referring to drawings. Okay, dokie. Right, so double entry. A debit to drawings, a credit to my asset disposal. Right? Okay, the next one. If there was an insurance claim, watch this one here. The vehicle or the asset was insured. The insurance company has acknowledged the claim. Yes, we will pay you out, but they have not paid us out as yet. Therefore, what is my double entry? A debit to insurance claim. And once again, understand this, in my balance sheet, this is an asset. It will appear under my trade and other receivables. Credit, asset disposal. Got it? Okie dokes. We're coming close to the end of the asset disposal in terms of the explanation. Now, if we make a profit on sale of asset, watch what's going to happen. We're going to debit the asset disposal and credit a profit on sale of asset. Why? Because it's an income to us. We have sold the asset for more than its book value. And as a result, we have generated a profit on sale of asset. And if there's a loss on sale of asset, that means we have sold the asset for less than its carrying value. Therefore, we will debit the loss on sale of asset because it's an expense. Remember, this is an expense to us, like this one here is an income to the enterprise. Remember, in your income statement, this will appear under your other incomes. Okay? Under my incomes. And yes, if we have a loss on sale of asset, also in my income statement under my expenses. Please make sure you know what I'm talking about. And so we will debit the loss on sale of asset and credit our asset disposal. This will now result in the asset disposal account. Watch what will happen. You'll see in your asset disposal account, all the information would result in the asset disposal account, closing off, like I said earlier, self-destruct. Okay, let's get into a question. You are provided with information in respect of Kagiso Traders for the year ended the 28th of February 2013. Right, the business is owned by Millie and Billy. Okie dokie. We are expected to prepare the asset disposal account for office equipment, namely computers, that were stolen on the 30th of June 2012. Right, notice this had taken place sometime during the financial year. There's the asset disposal account. There's my answer book. Let's look at the information. What are we told? Office equipment includes let's go through it again. Office equipment includes the office computers, right? So it's all my computers. And 6 of these computers were stolen on the 30th of June 2012. They were stolen, right? These 6 computers were originally bought at a cost price of 13,200 each. Like I said earlier on, remember, you have to read the full question. We won't swear, Abraham. We'll say read the full question. Can you see? 6 computers were originally bought at a cost price of 13,200 Rand each. Immediately I say, fine, let's go. 13,200 times 6, which is equal to 79,200. Okay, so that was my cost price. I've determined my cost price. What was it? 79,200. Okay, remember it was equipment, so my contra account would be a debit to asset disposal, and it comes from my equipment account. Okay, so what have I done? I've identified the cost price of my assets that were stolen. Right, what else do I know? The insurance company, Ace Insurers, only paid out 5,000 Rand for each computer. Right? So the selling price in terms of the insurance company, they're saying that they paid out, meaning we received the money. The moolah came in. How much came in? 5,000 for each computer. 5,000 times 6, guys, 30,000. We don't need a calculator for that. But if you want to use a calculator, by all means do that. Right? Don't take for granted. Always be sure and safe when you are working. Okay, so in our case, 30,000 rand was my selling price. Therefore, bank, and the amount is 30,000 rand. Why is that? Watch this here. The insurance company paid out. We received the money. 5,000 for each computer. Okay, now these computers were replaced at a higher price on the 31st of August 2012. Information. It means when you're going to be doing your calculations on your on depreciation, remember, sold, unsold, new, that's where it's going to impact on. For this question here, what else do we know? Watch this very closely. Engage with the given information. Remember, our focus is on office equipment. Let's just get that in view. Okay. What are we looking for? We are told here that the disposals at carrying value was 63,360. Okay? Now, if that was my disposals at carrying value, let me do a calculation. Watch this here. What was that figure? Let's just get it. 63,360. So we say 63,360, right? Minus the 30,000, which we received for it. And you find that that figure is a value of 33,360. Abraham? Can you just take it for a minute? I just need a sip of water, please.
All right, no problem.
Thank you.
As I'm taking it through, mindset is, let me remind you that if you haven't nominated your teacher, tomorrow is the last day for the Stars in Education Awards. Make sure that you get your form on www.ed.org.za/teachers. Nominate all your teachers because they're doing such a great job.
Thank you, Abraham. Back to you guys. Okay, watch this here. Now, we took the disposal at carrying value, which was 63,360, right? That's in my given information, guys. There it is. In line with, remember the focus is on equipment, 63,360. That was the disposal at carrying value. But I know for a fact that I only received how much for these assets? Where is my ledger account? There's it, 30,000. So in other words, if I go back to my calculator, notice the 63,360 minus the 30,000 was the amount that I received. Therefore, I can see that there's a figure of 33,360. What is this 33,360 all about? That, grade 12s, is my loss on sale of asset. So in other words, remember that the carrying value was 63,360 based on what we did earlier on. Did we receive more than the carrying value or less than the carrying value? Obviously, less than the carrying value. If you look at your calculator once again, notice 63,360 was my carrying value, but I only received 30,000 rand from the insurance company. So obviously, it was sold for less than the carrying value. How much less than the carrying value? 33,360. However, what do we know about the asset disposal account? What do we know about this account? we know for a fact that both sides must be the same. Remember what Ashraf said? This account must close off. It must self-destruct. Let's do that. 79,200. So we got 79,200 minus the 30,000, which was the selling price. Remember, I'm subtracting on the credit side, is equal to that, minus 33,360, and voila, like a shot in the dark. What is this here? What is the 15,840? Come on, you should know, you should actually see this answer. This 15,840 is, yes, I'm waiting for the answer, accumulated depreciation. That's right, accumulated depreciation. Okay, now you notice that I'm doing something here, Abraham. I'm abbreviating. Okay?
Mm-hmm.
I have a license, you want to see it, to abbreviate.
Yes.
Okay, I'll show it to you after the show. Grade 12s, you do not have that license. What you do is you make sure that you write it in full. You don't want to lose marks, because if a mark has been allocated to the detail, then you need to write out the detail in full. Okay, so that does it for the asset disposal account. Let's look at the next question. We are told that one of the employees, and her name is, Abraham, interesting name, eh? What's her name?
Divulge.
Divulge.
Oh, divulge.
Okay. Knows that the insurance policy only covers theft if there is evidence of forced entry. She also knows that Millie broke the security gate of the office to make the incident look like forced entry. She's not sure if Billy knows about this here. What advice would you give to Di? Explain 1 point. Now notice, in terms of the integration, we are now talking, Abraham, about the ethical part of this whole thing here. Okay?
Yes.
Now immediately, it appears that something is not very kosher here. Somebody broke the security gate and made it look like it was a forced entry. At the end of the day, we don't know what happened, right?
Mm-hmm.
However, look at the ethical part of the question. You are expected to say, what must she say? She needs to make the other partner aware, right? There are various options here. This is an open-ended question. She must do what is ethically correct. It means inform the other partner that this is what occurred. She may also think that she needs to blow the whistle, right? Blow the whistle means alert the insurance company. Because remember, if these two partners are in a business together and the one is acting in that manner, it means that this ship is not going to sail, because one of the partners seems to be a bit of a shady character.
Something is fishy.
Something is fishy. Okay, guys, so notice that you can also get theory types of questions. And my appeal to you, once again, is go through your past papers and look at the types of theory types of questions that you can get. What I'm certain about is that if there's a question on asset disposal, definitely you're going to ace it. Why? Because like Ashraf always says, guys, aim for the moon. And if you don't get there, definitely you're going to be an accounting shining star. From me, guys, cheerio.
Thank you so much, Ashraf. I had a great time. Well, it was an A-squared team, Ashraf and I nearly said Aslam and Abram for some reason. Thank you very much, Mindsetters, for tuning in. And also, make sure that you get the notes because they're very much important, and let's help one another. So a lot of questions over Facebook, and some mindsetters saying, you know what, this chapter is so easy. So help other mindsetters because that's the spirit. Alone you can't make it. No one can exist as an island. Otherwise, from us to you, we just want to say peace, y'all.
By this we mean, remember in your cash flow statement, one of the components that we add back is depreciation. And why do we add back depreciation? Because it is a non-cash item. It's an item that does not affect the flow of funds. So, depreciation as part of the cash flow statement, very important. Secondly, we also deal with depreciation when dealing with cash budgets. Remember, if you are preparing a cash budget, one of the items that will not, I repeat, will not appear on my cash budget is depreciation. Why? It does not involve cash. However, if you are preparing the projected income statement, then definitely you would show your depreciation. I hope that is crystal clear. Okay, so now let us start off with a very basic and simple calculation. If you are told that you are writing off depreciation using the cost price method, another name for it is the fixed installment method, and a third name for it is the straight line method. Now once again, AB, we can in fact tell our viewers this year that you don't have to be in grade 12 to be listening to us. Even your grade 10 and 11 accounting students, we welcome them on board, because definitely this is work that they've covered in grade 10 and 11 as well. So it will benefit them as well, guys. So come on, if you know the grade 10s and 11s and you know that they would benefit from this, make them aware. Guys, this is the place to be, because definitely you're going to learn from this as well.
It's all about sharing the knowledge also and preparing them.
Absolutely.
Yes.
And the grade 10s and 11s will be writing maybe their assessments soon, and very soon they'll be writing their final exams as well. So I'm sure they will also benefit tremendously from all our mindset lessons.
So true.
Okay.
And one thing that I found when it comes to accounting also, study groups. They help a lot when it comes to accounting.
As long as they get there and they work and they don't discuss everything else but the accounting. Okay.
Yes.
Coming back to the cost price method, guys, watch. My cost is 100,000. And whenever I am doing a calculation on depreciation, I always use art. Now, does this mean that you're going to draw a picture of your accounting teacher? Certainly not, guys. Art means, watch, the amount, the rate, and the time. So in other words, take the amount, the capital sum on which we're working out our depreciation, which is 100,000. Remember, this is the cost price method. So 100,000, firstly, there's my cost. Multiply it by the rate. That means the rate of depreciation, 10%, 20%, 30%, depending, right? And then multiply it by the time component. Therefore, you can see amount, A, R, T. There's your art. So whenever you're doing a calculation which involves depreciation, guys, always use art. Okay, so in this calculation here, what have we found? We have found that if you do this calculation, your answer for your depreciation is 10,000 Rand. And you are well aware of the fact that the double entry for depreciation is what? Come on, you should be shouting out the answers wherever you are. A debit to depreciation. Why? It's an imputed expense, therefore debited, and you would then credit the negative asset. Which one? Accumulated depreciation on equipment or vehicles, whatever the asset is that you are dealing with. Okay, now that's the one method. Remember we said cost price, and another name for it, a quick recap, is the straight line method and the fixed installment method. Okay, we now come to another method, and this one here says calculate depreciation on the diminishing balance method or on the reducing balance method, another name for it. But very important, in this one here, you find that you have to work with the carrying value. Notice a complete change from the other method. The other method was the cost price, and in this one here, it's the carrying value that we are working with. Okay, now let's take an example. Okay guys, when it comes to asset disposal, what is it that you have to remember? Let's start off by looking at the following. We're going to revise asset disposal, and we're going to show you certain shortcuts, certain techniques, certain methods that you need to apply when you are answering a question on this section. Now, what are the key concepts? Let us start off with depreciation. Firstly, depreciation, and I'm sure you know this, is what we call an imputed expense. What does an imputed expense mean? Now, very simple. If I say that this smartboard pen was worth 1,000 Rand at the beginning of the financial year, by the end of the year, if it's only valued at 900 Rand, obviously it has decreased in value. The decreased value for this year is what we refer to as the imputed expense. In other words, it's an expense whereby no cash is leaving the business. Now that is very important. Now once again, notice in accounting you do not learn in boxes. You don't learn in compartments. Watch. The same thing you will link to your cash flow statement. What do we mean by this?
Hello to you all, Mindsetters. This is your chance on Learn Extra Live to learn more with us and learn extra on accounting. My name is Abraham, by the way, and I'm joined by Mr. Ashraf. How are you?
Fine, thanks.
The accounting buffin himself.
Thank you very much, man.
Are you well?
I'm well, and how are you today?
I'm doing well. I last saw you in 6 months.
Yes.
In 4 months. I last did a show with you.
Where were you hiding?
I wasn't hiding. I was doing some business because you need business for you to apply
Were you
accounting.
actually putting the accounting into practice?
Yes, that's what I was doing.
Spot on, my man.
Thank you, and I hope to learn more also today.
Definitely.
What are we going over?
We're going over a section which matriculants, when they hear the name, guys, Mindsetters, accounting boffins out there, we're going to look at asset disposal today. Okay, and generally, when they just hear asset disposal, maybe they just go weak in their knees and they say not asset disposal. But we're going to make sure that after today, they're going to say yay
Yes.
for asset disposal.
Yeah. Well, I'm hoping for such response also. But Mindsetters, for you to learn more and learn extra with us, you need to join us on Facebook, like our page, join the 52,000 likes that we have. There are other Mindsetters that are there on Learn Extra. It's just facebook.com/Learn Extra. Secondly, you can follow us on Twitter at Learn Extra. Lastly, download your notes all for free on learnextra.co.za/live because we are live. The first link, notes, will be available also on our Facebook page. So for now, let's go ahead.
Thank you very much.